I learned my way through the journey. I'm learning the process. My revenue cycle management partner is learning the process. The information required to batch properly. You need that TPA, but you also need that plan sponsor. The billing vendors don't have that information. So I was parsing through portals. That's time consuming. It's trial and error. The IDRE says these 4 claims are improperly batched. Okay, you resubmit them. Once you learn the process, it hums. I was able to sign a network contract, and then I was able to sign a second. So I
You got some of these behind you pretty quickly, it sounds like. Yeah.
Yes, that's correct.
Healthcare providers are experiencing a massive financial strain brought on by big health insurers. That's why we are embarking on a journey to unravel the complexities, challenge the status quo, and find solutions to economic challenges that have been plaguing physicians, hospitals, and others for far too long. Welcome to The Strain, winning the battle with big health insurance.
Hello and welcome back to The Strain. I am Eliot Listman, the CEO of Eliot Group, a healthcare litigation finance company. As always, I'm joined by Jim Blakeman. Jim is a longtime champion of the interests of emergency physicians and emergency care. Jim, it's been a while. How are you doing?
I'm well, Eliot. Thank you. Thank you. Been having a little bit of fun lately.
I want to hear about it. I know we have Jennifer here, but before we get Jennifer going, Jim, I know you've been flying around the world having a great time. Just give us a quick scoop on where you've been spending the bulk of your summer.
I've been having a blast in Europe, mostly UK, England, London, and Wales, where 4 of my grandchildren are. So we spent this summer 7 weeks in Wales, running around Western UK, and just having a delightful time. It's kind of been absent from our conversations, but enjoying the travel immensely.
It gave us a break from the strain.
Right. I wasn't thinking about the strain.
You weren't thinking about the strain. Hopefully things
totally
are improving with healthcare here in the U.S. while you've been hanging out in Wales.
Exactly.
So one of the major issues that, Jim, you and I have been talking about with various guests has been the No Surprises Act, the independent dispute resolution, the IDR process that came out of it. And it's been quite a ride with various litigation around it, challenges by providers to actually get paid, understanding how it works, and really, at the end of the day, understanding that it's been a well-lobbied process by the insurance lobby, unfortunately. Our guests so far haven't been lawyers. So I'm happy today, as a lawyer, to have another lawyer participate. So welcome, Jennifer Brown, who is the general counsel at Progressive Emergency Physicians. I've seen your name all of a sudden all over the place. You know, we met maybe 4 or 5 months ago, and now all of a sudden you're getting awards at the EDPMA. You're featured on causal webcasts. So
thank you so much for having me. Always happy to talk No Surprises Act, TMA, all things IDR. Thank you again.
Jim, if I understand it, you and Jennifer actually met each other a while back. So this is the
we
first
did.
time.
Yeah. I don't know if you remember, Jennifer, but I do. When balanced billing went into effect in New York State.
Okay.
I happened to be at New York ASAP at the Sagamore that year. And we had a very stimulating conversation about what will be the impact of that. And oh my gosh, you know, is this going to crush us or how's it going to work? But I just remember an invigorating conversation for me and enlightening and really helpful. So that was my first, and I think we've talked a few times over the years, EDPMA, sure, and maybe just about what Progressive was doing and so forth. I remember our first encounter. It was memorable for me. So thanks for then sharing your information and now sharing your information.
Happy to. Always happy to chat.
When Jennifer, you and I first met, I didn't realize that it's your company that is providing all the emergency physicians locally. So when I had the misfortune to have to bring one of my kids to a local emergency room, and I need a VIP pass to the front of the line, I now know who I need to call to get there, right? Can you, just to kick it off a little bit, for those who are not familiar with Progressive, can you share a bit of its background and kind of your seat at the table as the general counsel and what you've done to help the business grow and navigate the legal and regulatory landscape?
Sure. So Progressive Emergency Physicians is over 10 years old. I want to say it'll be 11 coming up this fall. And we started providing services at St. Joseph Hospital. We have now grown. We're currently servicing 4 hospitals on Long Island alone, but we are an affiliate of Emergency Care Partners, which provides services in 10 states. We see over 1.4 million visits nationwide. So really, I do work for just the affiliate, just for Progressive Emergency Physicians. As the attorney of a smaller organization, I tend to wear a lot of hats. Obviously, I wear the legal hat, but it has required me to get very involved in revenue cycle management and sort of all facets of that, whether it being oversight of the process all the way through regulatory issues such as the No Surprises Act. Since inception, I want to say the No Surprises Act became effective in 2022. I was on maternity leave until August of 2022. And when I got back, I had to dive right into the No Surprises Act, all things No Surprises Act. I had to learn how to manage the independent dispute resolution process, really dive deep into it because I knew how critical it was to our business. And Progressive really, from inception, had an in-network strategy. And frankly, we were in-network with the majority of payers. That being said, there were a couple of payers we still needed to kind of close that gap and develop that relationship with. When I used the IDR process, that actually, over the past couple of years, we actually signed additional contracts. So as much as the No Surprises Act has created challenges, contracts have been terminated, contract rates have been cut in half, as we've all heard anecdotally. We have been able to sign network contracts at rates that we believe are fair and reasonable. For me, a lot of that I attribute to our success in the federal IDR process. So I think that takes us up to today.
I'm intrigued by that, Jennifer,
Yeah.
because some groups, as you well know,
Mhm.
and I'm interested in your experience here, report that they have had contracts pulled from payers. The payers have simply said, we've been paying you too much, you're out. Have you had experiences like that? Or was it more hey, we don't like the payment rates. We're going to get cranky about this. You better do us a better contract. Characterize a little bit about how that's gone down for Progressive and for your other groups.
Sure. So with Progressive, I will say I think we've had a bit of a unique experience because on the more positive experience, we were able to procure in-network contracts that we signed, right? So they were fair and reasonable. We thought they were in line with an appropriate reimbursement rate. So we were satisfied with those rates. That's not to say we haven't had others come knocking at the door. And to date, I am happy to report we were able to stave off any reduction with one of the payers that requested a cut to their reimbursement rate, and another payer, they asked for a reduction. We were able to have a meeting of the minds, and needless to say, we're still in network with that payer. So we had a minor issue, but all things considered, we remained in network. Both parties were happy with what ultimately happened. I want to say more of a positive experience, not ideal to be asked to cut your rate, but I want to, again, kind of bring it back to the No Surprises Act. And because of our expertise, I'm very close to the regulations. I'm very close to the proposed regulations, the litigation. I was building the plane while flying it in 2022. I was learning how to do the process myself. So I think I can attribute our success to my efforts there. I was able to say to them, I can do A, B, C, D, and I'm gonna win. I'm gonna beat you in IDR every single time.
Have you seen shenanigans in network payers where they don't pay you the contract rate now? You got a nice rate, but we're not going to pay that. Or we're going to audit you like every 6 months and demand huge paybacks. Or we're going to increase our denial rate. They don't tell you that. You just suddenly discover that you went from a denial rate of 7% to 23%. I'm making it up, But have you seen behavior like that by your in-network payers that has put more pressure on even trying to stay in network?
Well, of course. I'm not going to name names.
No, of course I don't want.
Yeah, I have to name names. I think we all know who may be.
You know the big boy.
Yes, there is definitely some nonsense as it relates to denials. You know what? At the end of the day, it requires a ton of babysitting from your revenue cycle management partner. Denial problems, audit problems. In my opinion, I think that is just part of the revenue cycle management process. You have to stay on top of it. You got to make sure your documentation's on point. I don't think anybody, from my perspective and in my experience, I don't think they're trying to force a renegotiation, force a termination of the contract. That hasn't been my read on it yet. But listen, I could be proven wrong next week.
Well, thank you for your perspective. It may just be business as usual, just more of that business being done than usual. So how about out-of-network challenges? What are you seeing there?
We really don't have any out-of-network exposure at Progressive.
Oh, you're pretty universally in network now.
Yes, Progressive is part of Emergency Care Partners, and again, we're in 10 states. So there is some additional out-of-network exposure in those groups.
Okay.
Obviously, we are aggressively pursuing out-of-network payments that have dropped precipitously. I mean, I think we all now know what the new average rate is, right? I think we saw, numbers, and then all of a sudden everyone seems to see approximately the same percentage of Medicare, ironically, across the country. So of course we are aggressively pursuing the dispute resolution process to procure fair payment. We've seen the same argument used over and over again. They're trying to mitigate healthcare costs and the providers are charging too much, et cetera, et cetera. So we actively pursued the federal IDR process for that limited out-of-network exposure for the rest of the group.
Jennifer, do you think cause and effect that your success with IDR caused the payers to be more willing? It sounds like it from hearing the story that it's a bit of cause and effect, because in an environment where payers are going the other direction, you're building the plane as it's flying, or whatever the expression is. You must have built a pretty good plane to yield these guys willing to contract rather than continue to just lowball and lose and defer payment.
Yeah, I have to say, so again, maybe my experience is unique, but I dealt with one major payer who everyone knows across the country and a more local payer. So I do have sort of it's not just kind of a one-off local TPA, whatever. It's one payer did come to the table. We had been negotiating with that payer for 8 years. So perhaps the NSA was just sort of the straw, and they figured, you know what, we'll figure this out, we'll contract. I can't say 100% for sure, because these payers have been dropping reimbursement to out-of-network providers. I can't really say why they went in with us. I mean, I know I made a good argument, but at the end of the day, they didn't have to. But in terms of the more local group that I was able to contract with, our success rate, and we were able to make a pretty good argument as to why an in-network contract made more sense for them.
Jennifer, how much pressure did you feel from your hospital to be in network? It's always been your stance to take that approach. Yeah. We don't ever want to be out of network, but you had to be sometimes. We all do. How much was the pressure from the hospital, the cost for settling for a decent contract?
Perhaps this is unique as well. We certainly had to participate with payers.
That's not unique. You're right, but getting it done is what's so hard.
That's exactly right. So we were able to keep an open line of communication. We had our hospital partners who were understanding and gave us the runway we needed to successfully negotiate contracts. So to the hospital's credit, we were given a lot of latitude and we were given time.
Well, that's been my experience for others who have said the same. Communication is what you're talking about. You were open with the hospital. Here's what we're doing. Here's how many times we sent these emails. We asked for this contract 4 times. They never said anything. We're still trying. That's what I've heard from other conscientious groups like yours. Yes. Who are able to say to the hospital, we're doing all we can. If you can help us, guys, help us. But we're just not making any headway. And then the payer realizes we got to get this done too.
And that's exactly right. I think that's the winning strategy. I think pre-NSA, post-NSA, nothing has changed. Frankly, I think the more you communicate, frankly, over-communicate. Can't go wrong. Frankly, if you want a good payer strategy, persistence is key, communication is key. You go 8, 9, 10 emails with no response, they're going to start to look kind of silly.
Yes, exactly.
Jennifer, I'm curious, when you were doing these IDRs through the federal process, where did you look for compelling data to use to advocate that the reasonable values were more than were being offered by the payers?
Great question. So we looked to a variety of sources. I won't get into too much detail, but I would certainly recommend looking at, as I think it's one of the factors, right? Prior contracted rates. You don't have prior contracted rates, perhaps look at prior payment rates. What did United pay you last week? December of 2021, payments looked a little bit different in January of 2022. If you have access to it, Fair Health. And then keep in mind, CMS has published public use files accessible to, as it describes, the public. I certainly would take a look at all available files. Keep me honest, guys. I think there's 2022 data and 2023 data. I certainly would take a look at all of that. If you have access to someone who's smarter than me and better with data, I certainly would slice and dice that data. I think there's a lot of good information there. That's where I would start.
Just clarifying, the public use data are the historical records from these prior IDRE decisions that were made pursuant to the process. So in effect, almost like a quasi-judge made a decision, and you could rely on those IDR quasi-judge decisions to say historically, hey, all this stuff got decided over the last couple of years. It's precedent, and it could be looked at to determine what the market value is or the reasonable value is for these physician services.
You can look at that data and, like I said, slice and dice it however you want. It includes every piece of information you could want. You could narrow it down by GeoZip, for example, if you have interest and you're providing services in Ohio or Iowa or New York. You can filter by specialty. And then they also publish the information on what the QPA is, what the offer is, a lot of excellent data. So certainly a good resource.
Can you talk to one of the things that in our own implementation of the IDR, and we do it as a service, is the challenge with batching and understanding what the rules are in practice. How do you use those rules to create batches? The benefit of the audience, the idea is that emergency physician services rates are not multiple thousands of dollars per CPT code. So you need to kind of amass a certain volume to create the economics. So it makes sense to spend the money to go do this, right? So batching becomes very, very important, but it's a very tricky ordeal that I know we always need guidance on or trying to navigate novel ways to be successful with.
Yeah, absolutely. I mean, especially for emergency medicine, I think a few other specialties, perhaps even radiology, it's very tricky. And what ends up happening, and as someone who we provide service here in New York, that is what's called a bifurcated state. So New York is one of 21 states who has a state law that prohibits balance billing. And then obviously we have the federal, No Surprises Act that covers all 50 states, or really the states that don't actually have that specified state law, which New York does. To kind of make this slightly more complicated, the New York law covers, we'll oversimplify and generalize, more the fully insured plans. And that's a small percentage of plans. Most of the plans are self-insured plans, those ERISA plans. So the reason I'm kind of starting with this, the batching rules get very tricky in states, especially like New York, because the batching rules require a variety of factors, including batching by the self-insured plan. And that means if, example only, Aetna is your TPA, but the plan is local school district 123. You can only batch with the, of course, with the other factors, certain time frame, et cetera. You have to make sure that plan sponsor is the same. It's not the TPA, which Aetna, there could be thousands, right? You're talking that local school district 123. That's where you have to batch. So it's very tricky. I think that the departments are aware batching really occurs in name only. It's really difficult to batch. Perhaps you could batch a handful of claims if you're lucky, if you have that volume. But I think the departments recognize there are some limitations with how they define batching and the proposed rules, which again, guys, keep me honest. I think those proposed rules came out in October of 2023. Which addressed certain procedural issues that the rules currently have. I think they're looking to perhaps expand upon the definition of batching, but again, we haven't seen a final rule there. This is all simply to say batching it's very tricky and it's created some efficiencies, but it's also created a ton of challenges because it requires a ton of administrative work and savvy to really parse out and batch correctly.
It's definitely something we see as a work in progress. At Progressive, did you have batches rejected and you had to resubmit, or were you kind of very conservative in the batching process? How did you kind of learn your way through that journey?
I learned my way through the journey, to be perfectly honest, because I'm learning the process. My revenue cycle management partner is learning the process. And to procure, as I'm sure everyone here on this call knows, folks that are listening, I'm sure folks know, the information required to batch properly. You need that TPA, but you also need that plan sponsor. The billing vendors don't have that information 90% of the time. So I was parsing through portals. That's time consuming. And you're limited to the number of people you can have doing this. It's trial and error. It's rebatching. That is a positive that we are able to, if the IDRE says these 4 claims are improperly batched, okay, you resubmit them. So unfortunately, it's trial and error. You really have to understand not only the information that they're requiring, but how to get that information.
Hearing you talk about this, sounds like you must have had a pretty significant team of people working on it. How did you staff?
It was just myself handling it. Wow. I hired an intern, but once you learn the process, it hums. It's the volume that gets tricky. But again, I was able to sign a network contract and then I was able to sign a second. So
You got some of these behind you pretty quickly, it sounds like. Yeah.
Yes, that's correct. Again, I think that's a more unique circumstance. I attribute it to really knowing the process very well and knowing the regulations, knowing the litigation. I'll give credit where credit's due. EDPMA is an extraordinary association. There's a ton of folks there who are extraordinarily knowledgeable. They've been in the business a long time, and the importance of using your resources really was also critical for me.
Any tips, tricks, techniques for getting payers to pay once you've won the IDR? A huge problem. Apparently it's getting better by the statistics, but still not there. I think EDPMA reported, I'm not going to even try to quote the numbers, but they aren't dramatically better than they have been in the past, where payers were just simply going to say, yeah, you won, go pound sand.
Right.
What's your experience there? Any tips, tricks, or techniques that you can share to get payers to pay?
You know what? I used the same technique I would have to pursue a contract, right? It's persistent communication.
Okay.
This decision came on this date. Who are you communicating with, right? That's the other trick. You have to find the proper contact at each of these entities, reach out over and over again, make sure you give them the right information. Everybody has a different claim number. Every payer has a different claim number. The billing vendor has a different account number.
Wow.
The more organized you are, the quicker you're going to get paid. To be honest, I will note, maybe again, unique. My experience, we got paid mostly within the proper time frame. I want to say most of the time. Again, I think it's because, the eligibility was there, the batching was there, and the decision came, and everything seemed to be pretty organized. There weren't delays with, again, maybe
That's a great tip right there. Be organized in what you submit. Maybe you'll get timely payment.
That applies to everything, right?
Of course.
But again, I will say back in, when we first started doing this in late 2022 or whatever it was, summer of 2022, a lot of tactics that have now occurred since then also were not necessarily being employed. I'm sure everyone here has heard of the non-initiating parties or challenging eligibility after submissions are due. These ridiculous tactics. That did not happen. I was not experiencing that, but those types of tactics have been anecdotally ramping up.
What's your sense of this legislation that's pending that may, in fact, create a penalty for not paying in the 30 days?
The Murphy Bill.
The Murphy Bill.
Anything that will encourage compliance is good for everyone. I don't know how an election cycle will affect these types of things, but I would love to see the Murphy Bill move forward, and I would love to see the proposed rule from 2023 also move forward. Anything that will ensure compliance and efficiency of the law, I think is a good thing.
What is the other rule that you were referring to?
The proposed rule from, I think it's October 27th of 2023, really the purpose is to create additional efficiencies. The rule will create an IDR registry, which is maybe one of my favorite points. Any payer, group, health plan, sponsor, et cetera, who would be eligible or subject to the No Surprises Act, they are required to register through the IDR registry. That means for providers like us, if I have to begin a dispute, I go on the registry and I plug in their name, their legal name, and I can tag, they haven't built it. So I would assume that I would be able to find their contact information, et cetera, et cetera. So you have less ambiguity as to who you're dealing with. It's right there. So that will, of course, result in clearer communication between the provider and that non-initiating party.
It particularly addresses the self-funded plans where there's lack of clarity of who it may be and how do you contact them.
Precisely. There are additional disclosure requirements with the initial payment or denial, which includes that legal name, which is how you can find them on that IDR registry. All in the proposed rule.
Yeah, what's the news on when it will be finalized?
Excellent question.
We're all waiting for it to drop. And
I think there's the OMB website indicated November 2024, but folks who are on the Hill every day probably are saying nothing's going to happen during an election
during
season.
the election. That's what I heard too. Talk a little bit about what you're doing in EDPMA. You won the Rising Star Award. Congratulations on that. Tell us a little bit about what you've been doing with EDPMA.
Sure. So it's probably been close to 2 years since I started to participate with, it's called the ITACT group. It was the tactical workforce that was developed to manage and try to fix a variety of issues plaguing the No Surprises Act. The folks that are on these workforces, we have calls constantly running through, hey, what are the issues? What are you seeing? Okay, now what do we do about it? So what do we do on the ITAC workforce? We're identifying issues and identifying how best to handle them, whether it's we need a letter, whether it's we need a meeting, whether it's A, B, C, D. It's just constant monitoring issues and figuring out what we can do to fix it or come up with a solution.
Well, thanks for participating in the solution. Appreciate your work there.
Of course.
Jennifer, can you get us up to speed? Kind of what's a Reader's Digest version of these TMA cases, and what are some of the impact, that matter to healthcare providers that are been frustrated with this whole process?
Sure. So TMA, I guess it's the Texas Medical Association. Colloquially, we all call them TMA 1, TMA 2, TMA 3, TMA 4. TMA 1, that's the first case that was decided back in 2022, whereby Cliff Notes, the district court ultimately said there is no rebuttable presumption that the QPA, that qualifying payment amount, is the correct amount. So basically, it's a factor. It's not the primary, most important factor. So TMA 1 sort of did away with a rebuttable presumption.
By the way, that's important since it's the insurance company who is providing the QPA. So
correct. Oh, we can take a step back. What is the qualifying payment amount? It is the average or the median payment.
Made it up.
Possibly also made up. The median in-network rate as of January 31st, 2019, as adjusted by inflation. And that calculation is done solely by the payers. We have no idea how they may or may not calculate it.
So it becomes a problem if that
it has
payer-driven is actually the primary focus of this IDRE making a decision.
That's right. So the qualifying payment amount is a number calculated by the payers, anticipated that it would be low. Challenges ensued beginning with TMA 1, whereby Judge Kernoodle agreed with the plaintiff, said there is no rebuttable presumption that this is the correct reimbursement amount. So TMA 1, the judge said, you're putting your thumb on the scale in favor of the QPA. That's not going to work here. TMA 2, the departments, I think, went back to the drawing board and tried to do the exact same thing by including some language in the regulations. Consider the QPA, then the other factors, which of course, if you just read it in plain language, is also elevating the QPA. They also required in the challenge regulations that the arbitrator, should he or she select an offer that isn't the QPA, you have to describe, and then the written decision must include why. It's an additional burden explaining why you didn't pick the QPA. Well, that, of course, is de facto elevation of the QPA. Judge Kernoodle again said, no dice, agreed with the plaintiffs. So TMA 1 and TMA 2, we'll kind of put them in the procedural bucket, right? They're addressing how the arbitrators can use the QPA. It's a factor, not the factor, not the primary factor. TMA 3 is really sort of, to quote Lin-Manuel Miranda, that's where the sausage is made, right? So TMA 3 is challenging the methodology to calculate that qualifying payment amount. Basically, the plaintiff said, you can't have ghost rates in here. You guys can't define the provider in the same or similar specialty. You guys have to include those bonus or incentive payments, and the self-insured group plans can't cherry pick. You can't have that TPA calculate a QPA across all groups. It just has to be that one group. Frankly, if you can batch for the one group, you should only be able to use that QPA. You have a little bit of competing guidelines at minimum, right? So TMA 3, again, Judge Kernoodle agreed with the plaintiffs, said you can't cherry pick your QPA calculations. Bonus and incentive payments are included, can include ghost rates, and he did not agree that the provider in the same or similar specialty is going to be defined by the plan. So TMA 3 is in flux a bit because the government tri-departments did appeal TMA 3, but only as it pertains to the ghost rates and bonus payments. TMA 3 is a little bit in flux, which means the methodology is a little bit in flux. And then TMA 4, that relates to the administrative fee. They increased it how many times? 6 or 7 times. TMA 4 basically said, you guys need to do notice and comment before you change the payments. So TMA 3, oral arguments occurred at the beginning of September. So hopefully within the next 60 or 90 days, we can get a clearer response on the methodology.
Excellent. I think we kept you honest, or you kept us honest.
Really helpful. Great summary.
By the way,
a lot.
Yeah, it goes on. We're not done.
As you talk through it, what is so clear is how the process was so defined with a preference to one of the parties. All of these things. are trying to neutralize that enormous preference in one party's favor. You can't have this payer define the predominant factor. You can't have the methodology that they use to create that factor, even if it's one of many factors, to be a sausage factory. It needs to be clear what it is. It's wild that we're still really just creating a level of balance at this stage.
For a long time, I was blaming the payers' lobbyists for doing that.
Yes.
Until it was pointed out to me by some very astute observers that no, Congress expected this to happen because they budgeted, what, $23 billion savings in insurance premiums because, hey, the insurance companies said their rates would go down if they got these preferential payment amounts. So have we seen the insurance rates go down now that they've been paying at the QPA rate over this time period? I don't think we have.
So, I certainly haven't. I keep reading articles about the
you have to pay the insurance, right?
Yeah, 8, 9, 10% increase.
Right,
exactly. So that's that's an odd one for sure.
Yeah. So I don't think the government's stealing money, right? So are they willing to get in, and will this new legislation, Murphy Bill and others, meet such resistance on the budget side to say, well, no, that 23 billion is built in. We absolutely cannot override that. Or are they looking at it saying, that's a bogus number. It's never going to happen anyway. That's a big who knows.
Yeah. Jim, by the way, my comment to you about it's the legislators, not the insurance regulators, is that where do you think the legislators got the information that
you're absolutely right. Yeah, the lobbyists are writing the law. Right?
Yeah.
We learned that, years ago. But you're right. Thank you, Eliot, for pointing that out.
There's a local trauma surgeon, Dan Haller, right, who brought this case challenging the constitutionality of the prior No Surprises Act. Got decided against him, got elevated to the appeals court here locally in New York. What's your takeaway there?
I don't recall the judge's name, but I do believe something very unusual occurred. There's been some challenging litigation. He has not been successful to date, but I believe the decision from the Court of Appeals indicated to him in so many words that if he kind of went back to the drawing board and perhaps started fresh, that would not be precluded. And again, to be honest on this one, there are a few that had a challenging procedural history, but I do believe the final decision kind of gave the wink to try again, just explain this differently. I do believe that's how that ended. It's been a topic of conversation, not in some time. It was certainly a topic of conversation when it occurred, in as much as, does he kind of come back to the table and try again, or does he kind of let sleeping dogs lie because the Court of Appeals didn't categorically prohibit bringing suit against the payers? If that was one of
right. That was our big interest.
Yeah, he wanted to sue the insurance companies, and I think that the Court of Appeals didn't fully outright say you can't. So whether they, I guess, bring another suit or not, that would ultimately be the question, or do they just kind of let it be?
We were always concerned that there was this myth in the market. And then particularly given that lawsuit, Haller claimed you actually didn't have the right to litigate even before the No Surprises Act, right? So there was a misunderstanding.
Right.
Way the case was pleaded. It presumed there was never classic reimbursement dispute litigation going on, which was, in fact, has been going on for decades, but it presumed there wasn't. And thought it was further made unconstitutional as a result of the law. Our sense is that, as you put it, the cloud is taken off because the judge allowed it to go back. The vision that I shared with you about an hour ago, right? It's like finally a decision where a federal judge in Ohio said in black and white that the No Surprises Act and the IDR is an optional process for this type of litigation is totally available, right? So, if you will, a provider, and particularly given the challenges with the IDR process, has an option. They could say, I could hire a lawyer, I could figure out how to litigate this. Or if I want to try to use this process, even with its challenges, the case in Ohio has a pretty black and white decision. And I think the Haller case, at least at the appeals court, alleviated the cloud of concern that was because of the district court's decision.
Agreed. I'm trying to think, Eliot, there's a case in Texas and a case in New Jersey. I think one case in Texas actually agrees that there isn't a right to a cause of action to sue the payers. And then there's a case in New Jersey that says the opposite. Have you come across those?
Yes, we actually have cases. We have a few cases pending in New Jersey.
Okay.
That continue to demonstrate that there's a right to sue the
Okay.
payers.
And through EDPMA at ITAC, we actually kind of kicked around, do we address this at all? Because at some point, this is going to come to a head. Payers going to be cherry picking where to venue these issues that come up. But ultimately, we moved away from really doing anything.
I think in Texas, rather than saying that the No Surprises Act prevents you from suing, the suit there predated both the No Surprises Act and the Texas IDR statute itself. And in that context, they just found that the specific causes of action that were pleaded by the physician group were not accepted as good causes of action under Texas state law. So it was more of a Texas state law issue. And that was a case that all the way to the Texas Supreme Court with one of the largest U.S. emergency physician groups. So it was an unfortunate decision on behalf of physician groups and hospitals. We're looking for other creative causes of action to look at a novel approach to still hold payers accountable for bad behavior in Texas. But I think, the key point is it's not a issue regarding the No Surprises Act.
Okay, that's important. Yeah. It's been a while since I've revisited that issue. That's good. Distinguishing the case is important. So a couple of other items that may be worth noting after that TMA3 decision, I'm sure as everyone is aware, the departments have taken a position of enforcement discretion as it relates to the QPA calculations. If the payers have improperly calculated the QPA, they're exercising enforcement discretion. They're essentially acknowledging plans are going to have a very difficult time recalculating the QPAs. So that automatically means they understand that the QPAs are not calculated correctly.
Mm-hmm.
So they're acknowledging that. There's a paradox here. There's 2 FAQs that have been issued. They have also described they will not be issuing interim guidance to describe to payers and plans how they should calculate their QPA. It's a little bit confusing, in my opinion, which sort of, again, underscores why they need to issue the proposed rules. The Murphy bill, I think, is really important as well. I think really anything to make the process and the law work as intended is really important. And I think that the department's describing enforcement discretion, it's just not going to help, frankly, any of the parties involved.
Fascinating. The journey continues.
Sure does.
Let's call it a wrap from this episode of The Strain. Thank you, Jennifer, very much.
Thanks for having me.
We could have done it in our live studio here in Long Island, but we...
Next time, there'll be a part 2.
Part 2, right?
From TMA3.
We get Jim Blakeman to come across the GW Bridge and join us here in New York. He's not far away. But thank you very much for sharing your views on the No Surprises Act, the IDR process, the way you really dug in and rolled up your sleeves to figure out how to be successful and got not only dollar results, but got these contracts as a yield on the back end. So that's a huge accomplishment. Congratulations on really great work.
Thanks for your great work with EDPMA and advancing the benefits to emergency matters.
Absolutely. Happy to help.
And for those out there, if you've enjoyed this episode, please do subscribe to The Strain.
Thank you for listening to The Strain. Please subscribe and listen to The Strain wherever you get your podcasts. The Strain is sponsored by Eliot Group, financing healthcare litigation.